A look at the charts. Equities are starting to pop here in pre-market. Let's take a look at the we'll look at the SPY 10-minute chart in the lower right. You can see a pop up here this morning on the 10-minute charts. We got some economic data coming out. Pretty much we're seeing a lot of things pop this morning. We're seeing the QQQs having a pop. If we go and take a look over at gold, we'll look at GLD. Gold's having a little bit of a pop up to the high from 3 days ago. And if we take a look at Bitcoin using IBIT here, we're seeing it's popping up a little bit as well. So definitely have some news shaking the markets up. When we look at the SP 500, we talked about this yesterday. We do have these kind of cycle lows coming together. So where we are right now in terms of the market, this cycle low, we had one here, we had another one over here, and another one over here. These are significant cycle lows, which you can see on this lower chart, this lower indicator here. This is a cluster of different cycles coming together, which when we are in a longer term uptrend, which we can see by our long-term investing chart, we're either in a bullish phase, bearish phase, or bullish phase. When we are in one of these bullish phases, dips, cycle lows tend to be standout lows and the market goes higher. Now, eventually one of these will fail and the markets will break down. But we're definitely coming into this point here. We talked about how the SP 500, the SPY, gap lower a couple days ago, looked like an exhaustion gap, and we're going to see a little bit of a bounce. And that's what we're getting right now. And then the question is it a bounce or the start of another move up? If we start to get another move up and money flows continue to strengthen, we'll be getting long the markets, moving out of the current asset that we're in, get long equities because there is some potential upside. SP 500 could rally 5, 6, 7%. NASDAQ could rally 11%. Not saying it's going to happen, just saying that's what we need to be aware of. And we might be switching gears to follow this trend if it wants to hook up and start to go higher. Now, if we take a look, let's take a look over at bonds this morning. We'll look at TLT real quick, see how they are moving. TLT having a big pop as well. So I'm not sure what the economic data is. I'll take a look later. But overall, in the grand scheme of things, it doesn't really matter. We follow price. And news-driven moves like we're seeing today tend to be a lot of noise, and it could be given back before the opening bell. It could be given back in a day or two. So we just let things shake out. It doesn't change anything what the data is. We just follow the price, and when the trend changes, then we will change to follow the market. All right, so bonds are up a little bit this morning as well. If we take a look over at the dollar, take a look at UUP real quick. It seems to be trading relatively flat. There doesn't seem to be any trading going on there. The dollar index not really budging this morning, surprisingly. It's funny that it's kind of stalled there. When we look at the dollar, let's just go full screen. More or less, the dollar is doing what it naturally does. It just kind of chatters. It kind of bounces up the moving averages, has a pause, bounces up the 5-day moving average. And that's what we're doing. A series of rally, pause, rally, pause, rally, pause is channeling its way higher. And hopefully we'll find some support and want to continue to move higher going forward. So it continues to be in an uptrend. And I think uncertainty continues to help and potentially rates not falling or rates going higher. As I talked about the other day, we could see rates actually go quite a bit higher. I'm showing that on the chart here. If we go to, actually I'll go to the monthly chart of the 10-year, the Fibonacci chart shows a huge move up potentially in interest rates. So this is pretty dramatic in terms of where the upside targets would be. We could be looking at like 6.5 over 8%, which means the bond markets will crash, real estate will crash. In fact, there was a clip there with Elon Musk saying there's going to be a huge wipeout in real estate pricing. Even Trump said something about it's going to be a new opportunity for investors to be able to buy into real estate. And I believe that. I mean, I've been talking about this forever. We're just waiting for the cycle to come. I'm drooling for proper getting into multifamily real estate when the time comes. So it's going to be very interesting to see how this year unfolds. It is going to be chaos. A lot of retirements, a lot of people's wealth is going to get wiped out. A lot of people are going to become multi-millionaires from the chaos, which is hopefully the side that we're all going to be on as we take advantage of all kinds of moves as the economy evolves. Just a quick reminder, on Sunday, I will be in Vancouver at the VRIC, the Vancouver Resource and Investment Conference. I'll be doing a workshop there on Sunday afternoon. This is an event put on by Jay Martin and his team. Hopefully, I can meet a bunch of you guys, show up. There's going to be lots of cool stuff going on, about 300 booths. So if you're in the Vancouver area, come on down, and I'd love to meet and hang out with you going forward. So let me jump into some big charts here real quick. I believe we're coming into one of these. This is the 2000 tech bubble. This is the 2008 financial crisis. I think we're coming into one of these big resets. And we need to be aware, not only can people lose a lot of money, but we can waste decades of growth. And the whole point of our strategy, I talked about this the other day, this top chart is our investing signals where we know when a bull market, a bear market, bull market. And if you were to just know when to get into a bull market, you can grow your account, and when to get out and step aside and go somewhere else just to earn interest, and then reinvest that capital for compound growth and grow it higher. And if you were to just do this since the COVID bubble, just the last two bull and bear market cycles, and the new bull that we're in, your account, $100,000 account, would grow to about $203,000. If you just did the 60-40 portfolio, you went through a huge rally, big decline, massive roller coaster, and you're up about 23%. So huge difference in knowing when to invest and when not to. And of course, if we go into these big waves and potentially have multiple of these, you can double and keep doubling your account very quickly by understanding if we're in a rising bullish environment or bearish environment. We've got strategies for the bull and bear markets. We've got strategies for all of these going forward. That is what our CGS or our ACS strategy is. Allows us to take full advantage no matter what the market trend is. So as most of you know, if you've been following me and watching the updates, we are in a stage 3 topping phase. Things are breaking down. I won't go into crazy detail, but the stage 3 topping phase, this was the ARK ETF. This was like the signature move of the mass psychology. It was like crazy as it was unfolding. And I was trying to tell everybody, everybody thinks they're superheroes making a fortune here. And then they all gave it back simply because they fall in love with something. They fall in love with their stocks and they go down in value. We've seen this happen in the marijuana stocks. They're dead, never probably coming back. Gold miners since the since the COVID bubble, you're still down in money. It's just falling in love with individual stocks versus knowing when to be in and when to be out is critical. And if you take a look at this is the ACS strategy that we do, it's just consistently growing, just slowly compounding our growth versus the ARK ETF. And this is how most accounts go. You make a bunch of money, you think you know what you're doing, you go all in, and then you lose it all. There was an 81% pullback in the ARK in growth stocks. People just got hammered, and now you're underperforming, and it's been dead money, and now you're hoping to get back up here. So this is the way that most people trade. They don't understand these cycles and these movements in the markets. Take a look at the dividend stocks. We've been talking about this for a while. The SP 500 down about 4%. Anyone, long-term investors with the buy and hold and heavy into dividend stocks, down almost 10% over the past month and a half, just showing that dividend stocks are not a safe place to go. In fact, most investors, 45 plus, they all own dividend and blue chips, because they're told they have good yields and they're solid companies, all that crap, which is true. But the reality is, the top one here is the SP 500. During COVID, when all investors start to panic, the stock market fell 35%. Anyone holding the dividend portfolio lost almost half of your portfolio, all because you're in the same stocks and everybody dumps them. Dividends are deadly, and when we go into a bear market, poor retirees get hit the worst with the so-called safe defensive plays, these big, strong companies. They're not a safe place to go. And if you compare that to our strategy, again, we're just consistently going up. This is the 2000 COVID crash. Dividend stocks, people's portfolio took almost a 50% haircut. And not only that, but bonds crashed as well. So this is like a double-sided. This doesn't include the crash in bonds. But you can see here, barely any growth after losing half of your account if you're in the dividend space versus something that's just constantly rotating into whichever asset is moving up and has manageable risk. Again, if we look at the overall performance, I want to just show this is one of the members wanted to see the comparison with the NASDAQ. So this is our strategy since the 2008 market top. This gray line here is the NASDAQ 100, the QQQ. So we are keeping up with the NASDAQ. Most people would kill to do that, be able to do that. We've got the S&P 500 underperforming our strategy in the NASDAQ, and then the buy and hold dramatically down from there. And of course, a simple visual is our strategy, 835% since the 2008 market top. The NASDAQ up still 800 and change as well. So we're neck and neck with one of the best indexes in the world. But look at the difference. There's max drawdowns, losses of 50+% if you were to hold this versus our strategy where we rotate in and out. This is where the value is. You can sleep at night, you can relax, you can grow your entire account with really 5 to 12 trades. It's slow, it's like watching paint dry, but there's nothing better than having free time and more money and returns every year without all the stress. So anyways, that's it from kind of a standpoint of where we are. Going back to the markets here, look at the S&P 500. We're seeing obviously some news hit this morning, so we're gonna have a big gap up on news. Again, I'm not a huge fan of gaps. Gaps tend to fade, meaning they get sold into. We're gonna see our panic sell, our FOMO indicator spike today. Typically when we see this indicator spike, we'll see the stock market sell off. So anytime this indicator gets over this, over this blue line, this is when we tend to see the market sell off very short term, just for a day or two. Sometimes you can go into a much deeper pullback and sell off, but we're going to see this indicator spike up at the open. Price is going to gap way up here, probably to the 20-day moving average, 96.70. So yeah, it's right up to the 20-day. I wouldn't be surprised if we see it get sold into and move lower. So everyone's going to be chasing prices higher today. We're probably going to see the market open higher, get everybody excited and pumped and sell off. But again, we'll just have to see how it goes. It doesn't change our positions or anything. This is a news-driven move, so chill out, relax. And if the trend does change and the stock market wants to go up, we'll just move into the long position. When we look at the S&P 500, we'll get green bars and we'll go and catch the next trade up. In fact, actually it brings me up. I want to show you the difference with our QQQ trade here. Our last one, we hit a 3% target, we hit a 10% target, we had a trend change at 6.5%. So we managed our position going up. Take a look at the buy and hold portfolio in the same time. Where we hit 3 targets and got out with no risk, well, no downside drawdowns. The buy and hold portfolio down 3.5%. We got out of bonds and moved to the stock market. Anyone who held bonds, and I know there's some of you now and you're still wondering what to do, you're down almost 14%. And this is why it's so important to understand which asset to rotate into and which ones to, what to get in, what to get out. And you look at stock market goes up, bonds go down. If you have the 60-40 portfolio, you're down because bonds have done such a terrible underperformance. They killed all the upside of the equities markets. Diversification is a great way to make really crappy returns and to have a roller coaster ride, which is what we preach. The whole point of what I do and my whole team does here, we really just focus. Our whole goal here is to help. This is my mission, is to help as many investors protect themselves, protect their capital, protect their lifestyle before this next financial reset, and to become wealthier during this chaos. These next 2 or 3 years are going to be ludicrous, and you either are going to struggle or you're going to thrive. It's either going to be a nightmare or it's going to be the weirdest feeling ever, which is like you're thriving during a tough time. But it's definitely better than struggling. So anyways, that's it for now. Talk to you guys in a bit. We'll see how the day shakes out and we'll go from there. Cheers.